Welcome to TradeTheNBA.com. This is John. This report is for the 6th, and while everyone got into the party yesterday, we ended up right to the ABM green. What a coincidence. Isn't that amazing how that works out so beautifully? Dip below, just fractionally turned around right on it, and we can see what we ended up with was midterm buyers. We had long-term buyers. Everybody started getting their short-term buyers. Still stuck a little bit with the orange. We need to get that to break below the red before you get a full pop out, but not surprising. We talked about this, the 5th coming up. Funds, got to put your money somewhere. Where are you going to put it? You got to go back into equities. You had a nice retrace. We're right back down at the lows. It was a good opportunity to jump in, a bit oversold. And it puts us now, you look at this divergence that we got created here. Okay, so we're at the peaks here on the S&P, not so for the NASDAQ. And then for the Dow, boom, clearly way outside. So we can really see the prospects of Dow Industrial and that idea that there's going to be a ton of infrastructure work going on, which is going to also aid banks, various things like that. So all working out deposit. Now, the interesting thing is, obviously, I told you ahead of time that the no vote here in Italy would be an easy defeat, and sure enough it was. That even in the hometown of Renzi here in Firenze, massive protests against it, so it was not even a shock. Now, did Italy need the reform? Sure, but is it a backlash to similar kind of things in the U.S. with the immigration, all that? Absolutely was. We saw the buy signal come back here in the euro. It was right about here. Orange dipped below, the steel came below the 7.5, and we started going back and forth. But now, does anyone believe that people all of a sudden want the euro now that Italy can't reform or do anything? No, this was a central bank intervention to prop it back up, particularly from a U.S. standpoint. It's very important to have the euro get back into the range that we have right here between these blue lines, which is right at this particular point. The question will be, can it sustain it, and will longer-lasting fears drive it lower? You fighting the Fed, good luck with that. You're not going to stop them from pressing the euro if that's what they feel they need to do at this particular point to provide liquidity and to make sure that there's no run on it. So at least for a couple of days, they're going to have to really press this, because they have to absorb any selling that's going into it, and that's simply a matter of stability. So not a shocking outcome. Obviously, at the beginning, when the first excitement of the idea that it was going to fail came in, and you get a bunch of sellers, and then they just retreat right into a force to short cover on it, and that's why you get the explosive up move. TLT, still same entry for that turnaround. Of course, the ABM at 121.05 right there. You can see slow increase. Just not getting any reset with the steel, and as long as it's that high, it's not going to do anything. And of course, oil, the euphoric move. Positive extremes got to get retraced, so it needs to come back even a little bit more than it already has. So not a surprise, but that's still cyan below red DOC. That is still generally bullish. And gold still not doing anything. That shakeout just continues to get beat up, and look at that orange staying right between cyan and red. No deviation, meaning continuation of exactly what you're looking at, which is drift lower. And this is so boring. Fine, the sell signal is correct. I mean, it was, and it dropped. What did we lose? Like a couple of points, if that. 04 down to 99. That's decent. 5 points is 5 points, but still, not going to lose a whole lot with that. And that's simply by virtue of the fact when you get that kind of money pouring in pre-market, and it was very clean too. I mean, it was nice the way it popped. Cyan moved right below the red DOC right there. So there's been a buy straight up, and even if you took it at that point, it was still nice run, easy to see. And we like it that way, clean and simple. Not a whole lot to do with it. This is that same, and everyone's going to equate it to Trump, blah, 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 and that's fine. We were talking about this before the election finished, so before everyone gets their, euphoria all out of joint and misses the boat, there's no surprise with any of this, and to suggest that it's affected one way or another is a bit specious, I think, and Doesn't mean that there aren't things that the market sees as positive. I'm just saying that it was already inherently built in that the market was going to be moving higher towards year end. So just got to keep it real. That's all we can do. As always, though, look for me on the Skype chat. Trade well.